we'll start with the notes this week. Lots of things that happened this week. So Monday morning, Bill Ackman, he mentioned that he covered his bonds short. So
Mm-hmm.
so yeah, that was good news for the market, and then the treasury went down. Um, but you know, so here the Nasdaq climbed back above the 13,000 level. So let's just look at the chart at the same time, because then we can understand better what happened here. Let me just turn on this Nasdaq. There. So yeah, before I turn this stochastic off, you can see on the daily stochastics, like we have this like correction going on since like mid of July. Lower highs, and this is like the third leg down. And if you look at the 10-day moving average, okay, let me refresh this. So yeah, so just to finish off the thought on this stochastic, we are like kind of near the bottom now.
Mm-hmm.
The blue line is not quite at the bottom. The blue line is, I think, there might be a slightly different average. So maybe a medium average. Anyhow, they both, yeah, so that one's getting close to, but this one already reached the bottom. So we're getting very close to like oversold territory. And the CNN grid fear is like extreme fear right now. So that's another sign as well. Yeah, so the slope here, you can see the 10-day slope right here. This is the 10-day slope right here. And then this is the 10-day slope right here. So you can see the slope has been getting more severe. And so that's, so yeah, we broke the 13,000 level this week. Once we broke that, we then tested 200-day. The one thing that I don't like to see is how it never found any support at the 200-day. Like,
Mm-hmm.
it just didn't even try to stay around it, it
Yeah.
just broke through that on Thursday, like very easily. And so to me, that's not a good sign. And then on Friday, we had a really good open, right? From Amazon and news, and but it gave back almost all its gains. so those are like lots of weakness right now from a technical strength perspective, right? So
Mm-hmm.
yeah, so this, like I said, like I'll be very, very cautious right now. And any new buys is it's gonna be very difficult. Um, I think, yeah, I have way more stops hit this week, and also even stocks that I mean, there's lots of stocks bounced too because of earnings, but I just see so many stocks like getting hit hard, going down right now. And if we suffer any more losses, like whatever, I don't know what other news will come out next week, market could react even more severely. The one thing that I don't like as well, like, so this is one thing. The other thing that I don't like is the wicks. Even with this much sell off, like Monday was the peak here, like Thursday and Friday, like it didn't really budge much. So again, there's not much like panic, right? Selling.
Mm-hmm.
It's very orderly selling, they call it. That's not a good sign. Generally, when markets start to panic, like you can see here, right? All the spikes, that's when people get panicked, right? But here we don't see those spikes. Once we see those spikes, then people start to calm down after that. Because all the
Mm-hmm.
people panic, the one who already sold have sold, right? Like almost everyone who wants to sell have sold. But here, we're not seeing that. Yes, it's starting to climb, like but it's not like panic, And so this sell off is a little bit different than the March, right? Like there's a lot of panic. Well, that was because of the banks too. So I think, I wouldn't say, oh yeah, the correction is nearly over, right? Because I feel like even though the sarcastics and a lot probably sentiment gauge and all that, like they're all showing like, oh yeah, they're oversold, and like they're in extreme fear, but that doesn't mean it can't go on for longer, right? Like if this goes on for another month, then maybe people will start to panic, right? Like it'll go to 25. Like some people want to see 30, you know, stuff like that. But I think it's hard to see 30 unless there's like some macro event happen. But I even think like even 25, right? Like it's reasonable, you know. So, but we're not seeing that. So that's to me, it's still, you know, combined with all these other things that I'm talking about, like, you know, not finding support at 200-day, because 200-day is such a huge, you know, institution support level in the history, right? Like look at this one. One day, second day bounce, third day went back up, you know. So so we need to see that, right? Like you know, so we went down. Okay, the next day it didn't really do too much. It's just trying to, like, I don't like the close. It's at the bottom, right? Whereas this one, you can see it was like near the, at least past the middle of the range.
Yeah.
But this one, it didn't even try to come back to the 200-day. That to me is like a little bit, almost quite obvious something's not right. But I think like the next couple of days will be very crucial where this land, because if it keeps going down and make new low again, then I think the market has given up then. And then how far it will go, I don't know, right? But definitely, yesterday's action tells us that, hey, no one wants to buy at this level. You know, let's look at the 15-minute chart. It's horrible, right? Like the chart. Like, okay, let's even go to smaller, like 5 minutes. So you can see it opens strong. In the middle of the day, it went up slightly here. And that was, you know, oh yeah, looks good now. Market looks good. And then guess what? Boom. And then it kind of just went sideways towards the end of the day. Like nothing really happened. But that's the thing, right? Like, why is no one buying at this level? That's what I'm trying to get at. Right? This is like below 200-day and no one's buying. That is not good. So that's Nasdaq. Oh yeah, let's jump to another chart. I'm jumping all over the place because we don't have much time. Sure. We don't have much time, so we'll just go with whatever flow comes into my head, because otherwise I may not have time to go back to it. Just let me pause it. So this is let me make it bigger. This is the Nasdaq. This was brought by Marcus Smith, Scott Sinclair, but it's by someone else. I don't know who made this chart. But anyhow, Nasdaq BREF versus Nasdaq index, right? So the red one is the advanced decline line, and just looking at history here, you can see, right, like how, you know, they basically like peak around here. So that's like, let's just say, yeah, June 2021. You know, June 2021, the advanced decline line peak. The index kept going until December 2021, right, because of the mega caps. And then it has been like that since. It just keep making new lows. We keep making new lows. And then now, like, we down here. So this is really bad. And now we're starting to see, like, you know, because of the earnings news, we're starting to see some of the mega caps getting hit hard, right? Why are people selling Google? Why are people selling like Meta? You know, like it doesn't make any sense to me, right? So something has changed, right? So if this is like with the mega caps, it's already this week. What happens if the mega caps start to fall? Like, are people going to even lose more confidence in the marketplace? Probably. And that's what's happening right now. People are losing confidence left and right. People are throwing in the towels, right? But the question is, how many? Is everyone throwing in the towel? You know, at least for I'm talking about like the short term or even medium term investors, right? Obviously, long term investors are going to keep holding as long as they can, right? So that's the problem right now. It's just this advanced decline line. It's just so weak. It's very hard to win in this environment, right? It's like it's very hard to make money in this environment. You gotta be dead right on certain stocks to even make money. And this year, I think, like, you know, we've seen many times now, like if you don't have the mega caps in your portfolio, you are definitely going to underperform the index, right?
Mm-hmm.
So and my guess is many portfolio managers are underperforming this year. Like, you know, I think very significant. So this chart is the Russell 2000 index up here. But what we're seeing is how many days since the last high, 52-week high. And you can see this spike here from 2000 to 2002, the internet bubble. And this was, I don't know, let's say, I don't know how many years, 2-3 years there, 2 years and a half or whatever. Like the most days since the last high. And then global financial crisis, we topped that number of days as well for Russell. And right now, you know, we're seeing this same thing happening. So we haven't seen this many times since 1980. This is the third time now. And you know, because it won't make, because we are at the bottom, right? Like we just undercut the low of the last 2-3 years. So it's unlikely it will even come up to the high for a while. Like I'm talking like 6 months or even more, unless some magic happened that it went bazooka. So this will be the you know, basically this will be like, I think they said it was like 70 days, right, to come back to the new high, which is impossible. I don't think that will happen. That's like by the end of the year or New Year. So that means this will be the longest number of days since last 52-week high. So this is Russell. So this is breaking history record, right? Like at least for the last since 1980. So that's why I think like this is something, you know, like I hope we're coming to the end of this, but you know, yeah, that's my hope, right? So let me jump to Russell for a second here. Okay, go to weekly chart. Like the daily chart is like, this is like, I'm gonna come back to daily chart. I'll say one more thing here. Like this slope, so this slope is already pretty bad here, and then this slope is almost the same slope, and then this one is like 70-degree angle.
Yeah.
This is like getting to the point where it's like it's driving fear for sure right now. Like if you're holding like smaller cap companies, like those are getting killed. So I think, you know, we're getting very close to shaking out all the weak investors. But everyone, like, you know, keeps. So here's the thing, right? And I don't agree with this, but I just want to say, during this whole, you know, 2002 bear market to now, we haven't seen the capitulation that most people say, right? Like, oh, we want to see wicks hit 30, 35, or even higher. And that's when we know, hey, this is a bear market is over, right? I don't think that will happen, right? I think this is one of those situations where in history, we just seeing this long gyration of corrections, right? Like, you know, this back and forth and stuff. And that's what's happening right now. And so if you're looking for those signals, I don't think you will see it. That's my own opinion. Obviously it can happen. I'm just saying, if you're looking for it, you might miss. Like if this bounce back right now, really strong in the next 6 months, you will miss this rally, right? Because you're looking for that signal. And we saw that in the, you know, in the beginning of the year, same thing. So people will miss that because everyone's waiting for that one day big drop, flush out everybody, you know, the 5% drop in a day kind of thing, right? It never happened.
Yeah.
So I would be, you know, what I'm trying to say is, like, don't be too bearish, right? So, you know, but at the same time, be super cautious right now because anything could happen. But like I say, I think we feel like, you know, I don't know, just my own thinking is it's roughly, you know, less than 2 weeks away from a definite bottom. So we did undercut this. That's why we have now we are all the way back, right? Not only 2020, since the, you know, 2020 time frame, but we are going back as far as late 2019, excuse me. So that's a 4-year, okay, of no performance. If you were holding Russell Index, you had no performance gain in 4 years. That's unheard of, okay? So this just tells you like how bad this index is. And like I say, I think we're getting very close that people are starting to throw in the towels. Like when I say it, I mean like everybody, right? So, and you know, it's really bad. Let's put it out there. It's really, really bad. So okay, so I'm gonna jump back to S&P quickly because I feel like S&P chart is also. Well, I guess it doesn't matter which chart. I can just go to Nasdaq. Okay, jump to Nasdaq for a second. And yeah, okay. So I draw this like, you know, how many weeks up kind of thing. And you know, we had this rally here, from mid-March, right? Or May. Probably starting around May, and it goes all the way to like August, like mid-July, and that was 19 weeks up. Okay. So that's fine. That's just the rally. But what I want to talk about now is this correction. How long has it been? So two ways a correction will end. One is usually like based on like how much it sold off, right? It can sell off really quickly, right? So for example, like if you go back to March 2020, the duration wasn't long, but the depth was like 30%, right? Correction. So this was like what? 5 weeks. 5 weeks of correction, 30%. Very sharp correction. So it you know, went way over 20%, and in 5 weeks after that it was over. Even though most people didn't think it was over, right? So, you know, until much later. So that's one way. The other way is time, right? So the time right now, if you count from the peak here, is actually 11 weeks. Okay. So if you go back even to like the beginning of the bear market in 2022, and you count all this downtrend, right? So there's 1 here, there's 2 here, there's 3 here. The longest one is 11 weeks. So what I'm trying to say is, we're gonna get a bounce very soon. Now, whether that will be just a short-lived 2-3 week bounce, right, or 4, 5, 6, 7 weeks here, we don't know. But we probably gonna, like in terms of time, we probably will get a bounce soon, right? And then whether it will continue back down, I don't know, or it can just climb out there, I don't know. But my point is, from a time perspective, I think we are ready for a bounce very soon. So that's something, you know, I feel like, especially now, right, when all the sentiment gouge is like you know, CNN fear gouge is like, so let me just open it up since I have it here. Yeah, 24. Right. So this is as of Friday. So that's extreme fear level now. You can see on the chart here as well. You can see these 3 waves down, and now we have hit like super low here. So I mean, it can go down lower. Don't remember, like I said, within 1 or 2 weeks of the low for sure. And so that's one thing. Let's look at the other one is the AAII investment survey. So this always goes till Wednesday. So look at this, 29%. So it dropped another 5 points. And look at bear, it jumped to 43%. So it's pretty high. Those numbers are getting pretty high, and the bullish are getting really low. So I mean, we're getting there, like, you know, in terms of sentiment. People are throwing the towels, right? And even I feel really negative this week. Like, I feel like, you know, hey, nothing's working anymore, so don't even touch the market, right? But usually when you think like that, that's when you start to say, hey, like, because you want to walk away from it. He's like, I don't want to pay attention no more. I'm like, you know, and all of a sudden we can see this rally go. And so that's why I say, like, you know, if we come back to Nasdaq, even though it looks bad, technically there's no way around it. But, you know, I won't be surprised, right? Like, Monday is always crucial day for the beginning of the week. We had a good Monday, but it reversed last week, right? That's why it wasn't good. Like, I was like, oh my god, it reversed. That's always a bad way to start the week. And so we really just see a strong Monday, and take everyone by surprise. And then from there we can build on that, you know, maybe on some good news or something, you know. And there's lots of news coming up this week. So let me go back to my notes. Yeah, I won't go through all this because I don't have much time this week. But let me see what else more important here. yeah, Bitcoin definitely, again, there's lots of momentum for Bitcoin because of all the ETF news and stuff.
Right.
The spot Bitcoin ETF. So that's huge. People don't have to go necessarily, deal with Bitcoins directly. Now they can just deal with the ETF. So that's a good news for Bitcoin investors. But what I was trying to bring up now, I forgot the train of thought. Anyhow, yeah. So the news, right? Like this week, we have Fed meeting. Like the chance, like I think this, I didn't go look at it, but everyone talk about it, which is like it's near 0% of interest rate hike, and even with December, the very slim. I think the last time I saw was like 20% or something. So it's unlikely the Fed will do anything. It's more so like, again, the market is like really wanting the Fed to say, hey, we are done, but the numbers, like the inflation numbers, like this week on Friday, PCE, where was it? Let me see here. Yeah, right here, PCE, it was in line, right? 0.3% for core. It was in line, and then even the 12-month core was okay. This slightly 3.7 from 3.8. So it did come down a little bit. So that's good numbers. But let's say it's still very high. Yeah. So, and then, I was hoping the GTP number, I didn't have my note here for Thursday, but the GTP number came out on Thursday. It was quite high, like 4.9, right? Yeah. So, yeah. So that didn't help the market as much. Like at the beginning it did, and then again it started to fall off by then. So it seems like no news can help this market right now. I think the market really, really want to hear, and the reason is because of the yields, right? Just because it's so high. So let me have this chart right here, 0 TNX, right? Okay, first let me just show the 10-year yield first, so we can see where it's at. Yeah, we hit 5% last Friday, and then this week, you see it many times now. It tried to come back close to 5%. It just couldn't. It just, look at where it closed. Look at where it closed. Look at where it closed. 3 days it come to 5. It just went close all at the bottom. So, is this the end of this? Possibly, especially after Bill Ackman, closes shorts, and then I don't know how big of a short he has, but like a lot of people follow him, and maybe also fundamentally, he think that the economy is getting worse, and so people are gonna rush to safety, and maybe they'll buy some bonds, right? So that's the reason, and possibly this has topped, possibly. And if this has topped, I think going forward it will be good news for the market in general. If we look at this is the comparison chart for S&P and 10-year yield, and you can see the 10-year yield just like pretty much act exactly opposite of S&P, right? Except right now the 0 10x hasn't made a new high. You see right there? That's a divergence right there, right? Whereas S&P made a new low. So meaning like this I don't know how you want to read this, but this could be top now is what I'm trying to say, right? But it doesn't mean but then S&P didn't bounce here, so I don't know, right? Maybe there's a delay, right? So market want to make sure that this is it, so if it doesn't move up higher, and even if it stay at this level, market will still be nervous because it can easily come back out, right? So if we start, if we go back to the 0 10x chart, if we start to like break the 10-day, and which it hasn't, that's the funny thing, right? So market is still nervous, and 21-day right here, so it still hasn't break even the short-term trend. That's the most, like even here it did, right? It found support 21 and bounced back. So we need to see at least break 21-day before market feel confident that this is it, right? So once that happens, I think we will see a rally in equities for sure. But until that happens, the market is very nervous right now that this could even go higher, right? And so really, it really comes down to this right now. I feel like that's where the market is. And I think the Fed is just going to stay the same tone. We're still seeing high inflation numbers. We'll be having higher rates for longer, blah, blah, blah. But the one thing the market wants to see is that when they will acknowledge that they will not raise hike no more. Like they just basically say, we stop. right? But right now, well, we can jump to it just to see what the market is saying, because all I hear is November and December. What about next year? So let's just jump to the Fed Watch 2 right now. Oops. Okay. So this is November. Yeah, so we're at 5.25 to 550. So you can see, yeah, 99.9%, no change. December, 80%, no change. And then let's go to next year. Let's see how far this get pushed out now. Let's see. 71%. That's still pretty confident. In March, 63. Wow, that's still pretty high. So the market is confident this might be over. You know, at least on the futures, 47%. So it's going really far out now, May. Okay, so yeah, you know, obviously the Fed can. There you go. This is the decrease right here in June. So that market futures is showing June start to decrease. So very interesting. So that's 6 months out, but you know, like I said, the Fed is not probably going to do it. Not going to do anything now because the yield is so high. It's really, you know, creating a headache for, like, I think the mortgage in US 30 years 8% now, something like that, right? So it's really going to weaken the economy in the coming months. So just this even being at this level, it's going to hurt a lot of things, right, in the economy. So Fed most likely is done if this is, you know, like, this is why analysts keep saying this bond yield have done a lot of the raising rates on the other side. This is the long term, right, not the short term. So whereas the Fed does the short term, right? So this long term is already going to hurt the economy down the road big time, you know? So yeah, and we're seeing that, right? Like mortgage applications or everything is starting to go down. So consumer spending, I think the number came in better than expected this week. But you know, so we'll see. And obviously GDP is still strong. So like that's why, like, it's a mixed picture, right? Like it's still very rosy, but really it's gonna come down to the job numbers. So that's this coming Friday. So you know, I think this is the biggest indicator that the Fed want to see, because remember, unemployment report is usually a lag. So if they start to drop, it could mean that and I'm talking about, like, probably more significantly, then it really, like, the Fed will probably be done. Like, they will probably acknowledge that. Of course, they're not going to say 1 month number will change anything, but at least the market wants to see that, right? We've been waiting for this to happen for so long. It hasn't happened. Come on, let's happen, right? And then the Fed will be like, okay, yeah, I think, you know, all these interest rate hikes have finally taken a toll on the economy, and business are starting to, you know, try to let go some. Look at Canada, right? All the banks are laying off, you know? Not big numbers.
Yeah.
Not big numbers, but they're all laying off people. So it's happening, right? Like I said, Canada is definitely in much worse shape than US right now in terms of the economy. And it's already happening in Canada. And they even said, like, this is not it. They will probably have to let go more people later. So that's scary, right? You know? Yeah. Okay, let's jump to some big cap like Microsoft. You know, it has a good bounce on the earnings. Again, it closed at the bottom of the range. Not a big deal. You know, it's a nice trend. But then Thursday it closed down below this trend line. Now, like, this is the problem right now with the market. Even some of this, like, good news are turning into negative news. And then Friday, you know, it didn't close down much lower. It was actually up there. So, you know, again, the market is just not in a good environment right now. But overall, this stock is, to me, is still, like, you know, very good, right? Good looking anyway. RS line is still moving in the uptrend. Yeah, and obviously they have support earnings. Tesla is not doing well, I think, and you know, the RS line keep going lower. It might have hit a new low. Well, okay, pretty close to the new low. So the stock price did hit a new low. So yeah, So it's but definitely like going downhill, right? So yeah, I don't know. Tesla is very weak right now. Apple reporting this coming week. Look at this. It's also near the lows. I mean, this consumer discretionary area has been hit hard, like really hard. Um, with the consumer slowing down, I think it will only get worse, right? Not get better. So unless the market already discounted for the short term. So I don't know, but I just don't see them doing well this next quarter because this is just started, right? Like people are just starting to buckle down on their spending. So it could be a while, right, before things change. So so that's Apple. Okay, now let's go to Google. This was a very big disappointment. I was seeing they missed on the cloud side, but they got punished hard. Like I was shocked. Like I got shaken up so bad. You know, and this is one of my biggest holdings too. Like I was just shocked. Like I was really shocked. Like this is a nice uptrend. This stock has been going on uptrend for a long time, and it finally gave up, broke all the way down. I mean, I hope it doesn't get to 200-day, but it's just so bad. Like this is the previous base. Generally, most good stocks. One of the things that I've learned, like any good stock, look at weekly chart. It's so ugly. Okay. Anyhow, what I was trying to say is that when during a bull market, right? Any good stock should keep building base higher, not lower, right? So now we're getting so close to this low of this previous base. If you're a long-term holder, I'm talking about if you're a long-term holder, like it's starting to drive fear now, right? Like it's like, wow, I'm giving up all these gains in the last few months since almost and so this is like looking really bad now. Anyhow, so that's Google. Amazon, like Amazon, they did pretty good. Like I think I don't know if they missed. Yeah, they did miss on the AWS side. Now I remember, but they didn't go down. That's the funny part.
Yeah, and Google was killed.
Yeah, it's so funny, right? Like the market choose to react to one and not the other. That's so funny. I don't understand that, but anyhow, that's why, like, I think for Google, and we talked about this before, is maybe that's not the main reason that people are selling it, right? Because I can't remember the guy's name, but he's very famous for investing in tech stock. But anyhow, he said that he sold all Google shares, right, a year ago, and he said that like he thinks Microsoft will take over. More people will search on using Bing AI than search on Google, and and that's gonna hurt them. And how's Google gonna integrate their own AI into their search, right? You can't, because once you integrate it, people are just gonna use the AI and not the search, right? And so then how are you gonna get revenue from the ads now? Like you can't show. It's hard to show the ads. Like they have to find a way to show the ads and stuff. So it's very hard for Google when they have so much revenue coming from the search engine. Anyhow, that's a long story. We'll talk about it another day, I'm sure. But anyhow, that's the reason how I feel. I feel the same thing as that guy, the tech entrepreneur. I mean, tech investor there. Yeah, Amazon is different, right? Because Amazon these days, for most retail people, they're like, they go Amazon because they can look for good deals. They look for coupons. They look for all kinds of deals, right? So I don't see, like, even if the economy slows down, I mean, Amazon could get hurt, but I think the long-term trend is still looking very good for Amazon because people are starting to use it to find deals, and they have lots of coupons now, deals on Amazon. So anyhow, there's Facebook groups that all they talk about is coupons from Amazon now. So people are following those groups and trying to save money. So it's actually, in bad times, Amazon could actually become one of those like staple, that people go to. Anyhow, so that's Amazon. Let's look at Netflix, because I do hold this right now. I got into a position. They gave back a little bit. They gave back a little bit this week, but not much. Again, this is very important right now. After a big, 1-day move, and Netflix, is known for those 1-day moves on earnings. So the key is just to hold that level, right, around this level, 400, and after consolidate a little bit, it usually will take off. So that's what I'm expecting from this stock. Who else did we miss? We probably missed one or two. I can't remember. But I'm gonna jump to now. Now reported good earnings on Thursday. Again, just like Microsoft, it gave back most of these gains. I mean, again, it's okay to give back gains as long as they hold, like, this where it kind of the lows, right? So it's trying to hold the lows right now. Let's see. RS line hit new high. Remember, Thursday and Friday market gave back a lot, right? So they were up, and then the stocks react similarly. But as long as they're still holding, again, now it's ServiceNow is an AI stock. So what other names came? Oh yeah, APPF also reported. This reversed badly. I don't remember when it started. Let me see. Yeah, pretty much at the beginning of the day. So I actually took a position in this, so I'm down right now. So yeah, unfortunately, but the numbers are really strong. Yeah, 400%. So and I think the forecast is also very strong. So this name, again, long-term trends looking pretty good. But market is so bad right now. Any new stock you buy will just easily get knocked out. And so it's not a good environment to buy stock right now. It's probably good to watch which ones are doing well after the earnings and see how they react. And once this storm calms, then we probably can think this stock that did well this earnings call will probably be the leaders next round, right? So that's what I think. I also see lots of industrials bouncing this week. We won't have time to go over them, but for example, one name EME, it's building maintenance. It bounced back this week on earnings. Let me see, this couple. I haven't gone through all the list, so I can't show you most of them, but I see a lot. Okay, this is a medical one. LRI is also, yeah, it's also in the building maintenance area, so that one also bounced big. There's lots. I saw a lot this week. I just haven't got a chance to go look at them individually, but yeah. So this one's another one that bounced. And you can see the RS line, like that's exactly what you want to see, right? It bounced so strong that the RS line is already near the previous high. Those are the stocks that you most likely will lead the next round once we have a rally. So yeah, we don't have time to go over many stocks. Any stocks you want to go over right now if you have time or not?
No, I think I'm good as of now.